This conference will now be recorded.
Our last review for week 3 is going to involve Dr. Kennedy, Dr. K, number 10 and number 10.5. This is going to put together everything we've done the first now 3 weeks. We're going to have a few regular entries, and then we're going to go right into the end of the year adjusting entries, and the adjusting entries also have a few correcting entries embedded within them. So what we're going to do is, using the November 30th trial balance that is provided to us, we're going to input all of these into our T accounts, noting, as I had mentioned in our previous example with Julie's, there will be a few, such as this asset, that is obviously an error. We need to put it in our T accounts as with the error, knowing we'll probably have a correction. There are a couple others that you should know will definitely are an error. This one would have to be an error because we would never have a debit balance in an account payable. And this one would definitely be an error because we would never have a credit balance for an expense. They still balance out, notice, because I still would have done the debit and credits to match, but I just didn't use the correct accounts, obviously, when I was putting together, when whoever was doing Dr. K up to November 30th had mistakes. But they still had their debit and credit balance. So just because these balance doesn't mean you're 100% correct, but at least is a good start. So if you haven't already, pause the video and input all of these into your T account sheet. Okay, with that, we are now ready to start with Dr. K. So we're going to do the first 5 entries. You should go ahead and again pause the video and complete these first 5. All you got to do is do the journal entries and T accounts for these first 5. Do not make a trial balance. There's no need to make a trial balance because we're going to go right in and do the correcting entries and adjusting entries. Then we will make a final adjusted trial balance. So at this point, go ahead and complete the first 5 regular entries. These are, I didn't make them the easiest, but they're not terribly difficult either. All right, let's go through the answers. Pull my sheet up. All right, paid the office rent for the current month and the next 2 months for $1,500. So what I got was rent for this month, which would have been $500, but I also got rent for the next 2 months. That would be prepaid rent. All of it as a credit to my cash. So my initial journal entry here, 2 debits and a credit. On this one, I do not have the T accounts. By now, you should know what journal entries look like and how to properly put those into your T accounts. So I'm only going to be presenting the journal entries. What did I get? I got 2 things, and I credit my cash for how I got them. The December 11th, billed a client, T. Jones, for what we do. We are doctors, so consultation. So I'm going to debit, not cash. He hasn't paid me yet. I'm going to debit that he owes me. We have an account receivable that we need to set up for T. Jones. And since the service is done, that can be a regular service revenue. On the 14th, received payment from K. Smith. So I need to look at my trial balance coming into the year, and it said K. Smith owed me, and he's paying me. So yep, here it is. K. Smith did owe me $700. He's not paying. So the debit question, what am I getting? I'm getting cash. Credit question, where'd the cash come from? It comes from directly from K. Smith's account. So K. Smith now owes me $0. His account should be wiped out. So our journal entry, debiting cash, crediting the AR account receivables. K. Smith. Oh, it was only $300. Sorry, it wasn't the full amount. So it's not wiped out. It's just lowered down to $400 instead of $700. Paid our employees $1,500. This one should be pretty simple for you by now. Debiting, what did we get? We got the benefit of our employees working. How we got it was by paying them cash. In our final regular entry, we made a payment on our car loan, $400. Only $100 went to the note. So that means the rest of the $300 went as a thank you for loaning me money. So a thank you for loaning me money is the same thing as interest. And then I get to take off, what did I get? $100 off of my bill, so not much. A credit of $400 then to cash, because why did I have a thank you for loaning me money, and why did I take a little bit off my bill? Because I paid money. Okay, moving on to the adjusting entries. What you might want to do is just draw a line or so across on your journal paper to show you're ready to start the adjusting entries or correcting entries. Our useful life of 5 years. We've already depreciated at 3. So we need to look at the car. Yep, okay, so that makes sense. If I've already depreciated at 3, so 25 divided by 5, 5-year useful life, that's 5,000 a year. For 3 years, that makes sense that this would be 15,000. Now we're going to tack on another 5 to this. Remember what the expense is, because we are using the car for another year. We're going to need to add a new expense down here called depreciation expense. So I'm going to depreciate another 5,000 on my vehicle and add another 5,000 to my accumulated depreciation account. $300 of prepaid advertising was used during December. Now, if you haven't finished these, do not just go along with me and write them down. There's no need for that. You're not going to learn anything. You need to go through these if you are really going to do well on the quiz, the upcoming quiz, and upcoming exam. You're going to have to know how to do these without me explaining them. You should have all these already done by the time we get to them. So continually pause the video, do as many as you can, and then come back to see how your answers match up. Okay, 300 of prepaid advertising was used during December. So I got the benefit of advertising. And let's look how much advertising I already had. Prepaid, it says 300 was used. So I had 800 total. I've used a little bit of it. So we're simply going to take 300 out of the prepaid and move it to the expense because I'm using it now. And that expense, it came from my prepaid account. Normal payday is the 4th. However, we don't really care about that. All we care about at this moment is how much of our employees earned as of the 31st. Just because they're getting paid $400 on the 4th, I'll take care of that next year on the 4th. We'll see how to do that in week 4 and week 5. Right now, all we care about is updating our books for as of December 31. So we need to debit to show that our employees have worked. And then why they work? Well, usually for cash, but we haven't quite paid them yet. We owe them. So remember, that's called a wage payable. So debit our wage expense, credit the wages payable. Completed the job for JCP. I look at my opening trial balance again, or you would look at your key accounts. We completed the job. That means I owed them a job. And this shows me that, yep, I owed them a job, unearned revenue for $2,000. If I completed it, I do not owe them anymore. So I'm going to get rid of this credit. What did I get? I got a reduction on what I owe, so that is my debit. My credit is, why did I get a reduction? Because I did my job. That's service revenue. Okay. Our 5th one deals with our first correcting entry. So original entry for supplies was an error. We purchased supplies from GNC on account for $1,600. The journal entry was listed as a debit for $1,600 to AP and a credit to supplies for $1,600. So when I'm thinking of this, what was the real entry? It says we purchased supplies on account for $1,600. To me, they just got it backwards. It should have been a what did we get? We got supplies. Why? Because we put it on account. We'll pay later. They just reversed it. They showed that the account was being paid off and they were losing supplies. So off to the side, you could go ahead and put this in journal form, but since it's listed right here for me exactly what happened, I don't necessarily have to, but for visual purposes, it may help you. You may want to put the debit and then below it the credit for supplies. Now we need to do the undo. First thing we always do is undo the bad entry, and then the second entry, do the correcting entry. So let's look at that. So I'm going to undo this. I'm going to debit my supplies and credit the AP account to get that back like it never happened, get things back to zero. And then the correct entry was actually the undo entry. So what I'm doing is simply doing the same entry twice. Reversing the bad entry, which was backwards, and then doing the correct entry, which is going to be the undo entry. So what that does, remember, if we look back to our original AP, had a debit of $200. That means I owed a negative amount of money. Well, that was only because I had done the AP transaction incorrect. Now, not only did I add back the amount that we just did, the $1,600, so that puts me over here at $1,400. I now need to add on another $1,600. So I'm going to be up to a $3,000 balance, which is going to be on the credit side, which is where it belongs. And then the supplies, notice how they were off. If I debit the $1,600 to the undo, that puts me back at zero. And then I put another $1,600 over here. The $1,600 will end up on the debit side, which is where it belongs, not on the credit side. Okay, we got one more adjusting entry and then one more correcting entry. Hopefully you have these done. Make sure you pause and try these. Otherwise, it is really of very little benefit just to copy down what I have. Final count of supplies showed 500 left in the store. Okay, so that we need to go back to our supplies. Our supplies, now that we've corrected them, has a $1,600 balance. They say we only have 500 at the end of the year. So that means we used 1,100 in supplies. If I used them, I got the benefit of it. So now I'm going to debit my supply expense and credit some of those supplies because they are now being consumed, used, or gone. Finally, the November entry for wages of $1,500 was correct. The journal entry that occurred was a debit to cash for $500 and a credit to wage expense for $500. So not only did they use the wrong numbers, they used the wrong accounts as well. They were backwards on their account. You should never have a credit to wage expense. You always increase your expenses. And wages paid, if we debited cash for $500, that shows that we got money. We didn't get money. We paid money. So the first thing we need to do is off to the side, if it helps, make a visualization what happened and then undo it. So I'm going to undo my debit to cash and my credit to wage expense. So I'm going to debit my wage expense for $500 and credit cash for $500. That's my undo entry. And then the correct entry still has these accounts in the same order, just with the correct number this time. So wage expense should have been $1,500. Cash paid or a credit should have been $1,500. Okay, at this point, you need to pause, video, and you need to total up all of your T accounts, total up your parent accounts, and see if your equation balances. If you do, continue on and make the adjusted trial balance. The adjusted trial balance is what you will need in class for week 4. We will be using it just like how we're going to be using Julie's to continue on to our final steps in the accounting process. So go ahead and total up everything now, and then we'll look at the answers. Okay, I'm going to pull up over here to the side the equation balances. I have these off to the side of my trial balance like I did on the prior example. So the total assets that you should have got, 37.9. Along the top of your T account, you should have had liabilities, 26.2. 18,000 in owner's equity, 9,500 in total revenue, and 15,800 in expenses. Then when you put them all together, all of your liabilities, owner's equity, revenue, and expenses, I get 37.9, which equals my assets. So that's one big checkpoint. I now have all of my accounts in order. I've got all of the assets. Who owes me money, cash, and my prepaids, all the way down to my equipment. Noticing, remember, the contra account here is a credit. I've got my proper title, what it is that I actually have, what I'm working on, the adjusted trial balance. Got my 3 liability accounts. They're all where they should be on the credit side, so that's good. Capital, my drawing is my contra account, so it's okay that it's over here in the debit. My retained earnings, we're going to talk a lot about that in week 4. And then finally, my revenue minus all of my expenses. And all the expenses are on the debit side. And then when I total everything up, the debit and credit still do total 77,700. Okay, you need to have this for class when we come for week 4. At that, we will end this video.